Welcome back to my market review series. In this video, I'll be going through my trade plan for the Canadian dollar against the Japanese yen, and I'll begin with breaking down my technical analysis. So, as always, I like to start from higher time frames, work my way down to the lower time frames. So, this is the monthly time frame, and on this time frame, I I always mark out my extremes, that is the previous month's highest point, the lowest point, as well as the mid range. And as can be seen on the chart, this is the previous month, this white candle right here. Then this is the previous month's low. The the other horizontal blue ray is the previous month's high, and this is the mid range. So after that, I zoom into uh, the weekly time frame and do the same. So these levels are important for context as well as confluence. Context, by context, I mean I like to know where price is compared to the previous higher time frame zones. So right back to the monthly, we can see that currently price is right here, which is below the previous month's high. And if we have liquidity zones within the previous month's high that are higher than the price, they would make good areas to wait for shorts. So if price revisits a liquidity zone of the previous month and gives me bearish price action, I'll be able to take a short. That is a higher probability short because of the confluence. So down to the weekly. So on the weekly, I also do the same. I highlight the previous week's high, low, and mid range. Just a second, let me clear the chart. So right off the bat, even without making any alterations to the chart, this candle formation is quite apparent, and it is known as the evening star, which is an indication of reversal. And in our case, it adds to our confluence. So I'll explain on that later. First, let me highlight this is the previous week's low, this is the previous week's high, and this is the mid range. So this is a weekend, and the the coming week's candle has not yet opened. However, the previous week's candle has closed. That's why the levels lie on the final candle right here. So on the daily is where I like to look for my points of interest. These are areas of value, areas where I would be keen on the price action to either take a trade, a short, or a continuation trade to the upside. So these are zones where these are entry zones. I don't enter trades if price is not at my point of interest. So I'll show you how I derive this particular point of interest. This blue zone is my point of interest. It is a daily order block, which is as a result of this last buy candle before this move, aggressive move to the downside. Uh, the zone was revisited. We grabbed liquidity from that particular daily order block. Then we had a sustained trend to the downside. So that's how that became an area of interest for me. Let me clean up the chart so that we move ahead. Then on the opposite side, now the sell side liquidity areas, that is the opposite side, I'll also mark out my zones of interest. So this is the first zone of interest, and this is the second zone of interest. As you can see, this sell candle was the origin of this aggressive move that led to our point of interest right there. And this particular buy sell candle was the origin of this sustained uptrend. So I've already marked them out using these particular blue rectangles. And so far, we know where I'm interested in taking trades, and we know how price, what levels what level price is at compared to the previous high time frame zones. So given that this is a point of interest for me, and we've had this particular sell-off from my point of interest, and this particular uh, This is a, it will be more apparent on the lower time frame. This is a liquidity sweep, not a grab. A grab is almost, a grab is always abrupt, but a sweep is gradual. That means the big players are building on their orders. They're trying to fill their orders without affecting the market. Let me give you an example. So this week right here, let me clean the charts. So this right here, this particular price action right here, you can see this was an area of value for me. Price visited it and bounced off almost instantly. So this is a liquidity grab. So this means orders were filled at market and they affected the price. So the price had an aggressive bounce. However, sometimes big orders are filled slowly. That's why we have such price actions that we find that price ranges at a point of interest for a while before having the aggressive sell-off. So this is apparent in this particular time zone. So this video will be a bit longer because of this particular explanation. So as you can see, price had the first visit to a point of interest, sold off, it went back, had a minus sell-off, then you see. So these are orders that were being filled before we had this major sell-off. So back to the weekly. Now, as I was saying earlier, this is an evening star. This particular candle formation where we have it's comprised of a buy candle, then we have a pin bar and a sell candle that engulfs the buy candle. So this particular formation, uh, coupled with uh, it being at my point of interest and this low time frame liquidity sweep, makes my bias to the short side more potent. That means my trade will have high probability of playing out. So enough with the lecture. So after a visit of my point of interest, I like to see a sell-off which breaks the final low that led to the particular point of interest, my demand zone. So as you can see, price had an impulse, a brief pullback, then another impulse which led now to, this was the first move that led to our demand zone, then we had a sell-off. So this low is what I'm interested in. If this low is broken, I know the market is more likely to change character and reverse to the downside. So after seeing such a sell-off, I wait for the market to give me a better price for me to get into a short. So this buy candle right here, which led to this particular move that broke this structure, is a level where I am likely to take a short. So the reason why is this particular price action at this level shows me that there were a lot of market orders at that particular level and they've probably not all been filled. So for me to take a better risk to reward ratio trade, I will wait for price to revisit that level so that I take a short. So my first target for the short would be this first daily origin, and the second target would be this daily origin as well. So if I were to take my short, this would be how. So let me illustrate how what I'll be waiting for. This video is quite long. It's longer than the rest, but I hope it will be worth it because of so that's how my short will look like. That's the particular origin. This red zone is the particular origin I want to be revisited by price. Then if if the internal structure or price action of the lower time frame gives me an entry trigger, I will pull my trigger on the shorts. So this is how my short will look like. I'm expecting for price to come back to the last week's range. As you can see, we are right close to previous week's low. So we might take out the previous week's low, then come back for liquidity, more orders, more market orders to push the price lower. So this is where I'm waiting for price to come back, give me a trigger, then this will be my target 1 and this will be my target 2. So if it plays out to completion, this will be a 1:8 hour trade, and I'll make an update when we are triggered into the market. And even if we're not triggered into the market, I'll still make an update. So that's that. Make sure you watch the rest of my playlist. This has been quite a long, but I hope educative video. If you have any questions, you can join my private group on Telegram. I will link it in the description. You can also ask in the comments. So that's that.